Hi, everyone. Thank you for joining us. My name is Elaine, and I will be moderating today's panel on the impact of COVID-19 on the art market in the Asia-Pacific region. The world has changed dramatically since cases of COVID-19 were first reported in late December in Wuhan, China. Today, the coronavirus has sickened over 40 million people and caused the deaths of 1.1 million people worldwide. Many countries in East Asia were the first to experience the earliest waves of COVID-19, which led to a complete or partial lockdown of almost all aspects of life. This, of course, has had enormous impact on their economies, with almost no industry, including the art industry, untouched by the pandemic. As governments across Asia attempted to restrict large-scale public gatherings to limit contagion, public museums were ordered closed, and many private museums, galleries, and independent art spaces followed suit. Here in Hong Kong, we have managed to get through 3 very disruptive waves of infection without a complete lockdown, but everyone nervously waits for a possible 4th wave. And recently, the IMF projected a global recession in 2020 due to COVID-19, with global economies expected to shrink by 4.4%. Today, with leading arts economist, Dr. Clare McAndrew, we will be discussing how the art market, with an emphasis on galleries and collectors here in Asia, have responded to this unpredictable situation based on the very first and highly informative mid-year survey on COVID-19's impact on the gallery sector, written by Clare and co-published by Basel and UBS. In the report, she spoke to over 800 international gallerists and 300 high net worth collectors based in the US, the UK, and here in Hong Kong SAR, to understand the challenges the market faces now and in the immediate future. Also joining us is Marc Spiegler, Art Basel's global director, who is speaking to us from Basel about the strategies and the initiatives both Asian galleries and the fair have explored and implemented since the very beginning of the pandemic. Giving us a broader view of how all this fits in to the larger world and the economy is Adrian Zuercher, who is head of global asset allocation at the UBS Chief Investment Office here in Hong Kong. We will begin with Clare, who will share with us the key findings of her mid-year survey, and then open up the discussion with Marc and Adrian. At any point during this panel, you may send over questions in the box below the screen, and we hope to be able to get through all of them at the very end of our conversation. So now I'm going to pass it over to Clare, who will take us through the main findings of her extremely informative mid-year survey. Clare, over to you.
Thanks very much, Elaine, and good morning from Dublin here, where we're actually just have begun last week another lockdown. So I'm sure we have a lot to learn from what you're doing in Hong Kong. But it's been a difficult year, and we checked in, as you said, with galleries halfway through the year. So we did a kind of a survey of these 800 global galleries in July. And we have some kind of interesting findings that are quite indicative of how the year has gone so far. In the first chart I have is the gallery sales, and you can see across the board sales were down around 30 to 40% for galleries. This is contemporary and modern galleries. So the average decline was about 36%, and you can see here there was declines across the board regardless of the gallery size. The worst hit was the segment between 250,000 and 500,000. So the mid-range galleries was probably the hardest hit. And that's difficult because they were one of the hardest hit in the previous recession and coming out of the global financial crisis. But it's been difficult for galleries across the board. I mean, they're in an industry that's based on, I suppose, non-essential purchases, and they're based a lot on travel and discretionary spending, and they're highly reliant on events which have all been cancelled more or less this year. This was just the first half of the year, and we did ask them how they thought the rest of the year would go, and most galleries are expecting a fairly substantial decline for the year. There's obviously second waves and things here in Europe and closures again, so it wasn't a kind of a neat start and finish, I think, that we were all expecting maybe earlier in the year. I mean, there was a little bit more optimism for next year. but still less than half the galleries we surveyed thought their sales would rise next year as well. And that's from a pretty low benchmark. So not a lot of optimism. And again, that segment between 250 and 500,000, the least optimistic about the coming year. If you look here by region at the next chart, you can see that this was kind of a worldwide crisis, obviously. So the impact was felt right across the board. Galleries in Asia actually faring a little worse in terms of the first half of the year. So in Asia as a whole, down 48%. But that was dragged down by kind of Greater China. So that sales for the Chinese galleries down 55%. So if you took China out, Asia did a little bit better. But I think a lot of that is timing as well. Obviously, as you said, in Hong Kong, you've been dealing with this since right at the beginning of the year, where some of the galleries in Europe and the US had a first few months of the year to kind of still be making pretty regular sales. And there was even in parts of Asia, in particular, in the survey, there was some kind of outliers as well in places like Australia and other parts of Asia that did pretty well in the first half of the year. And they're saying their collectors are usually away, traveling and going to international fairs and kind of seeing exhibitions overseas, were kind of captive in some ways. They were kind of staying at home, looking at local galleries. So there were a few galleries actually did okay in Asia, but unfortunately they were the minority. They weren't the majority at all. A big worry in this period, obviously, is employment. And 1/3 of the galleries we surveyed downsized. And that was a little bit better in Asia, but still 30% downsized. And the problem with downsizing in the gallery sector is that they're small businesses to start with. So the average size of a gallery, including full-time and part-time and contractual staff, is only 8 people. So there's not a lot to lose. And the average downsizing was 4 people, and then half of those were full-time jobs. Obviously, the biggest losses were in the biggest galleries, the big multi-premises galleries. They probably had the more employees to lose. But still, looking at that difficult segment, the 250 to 500,000 segment, they started the year with only 5 employees, and they still 38% of the galleries we surveyed in that segment downsized. So it's a difficult time for employment, and a lot of galleries seeing that this is stabilizing. The worst is over, but that's really mainly because they've kind of gone down to the minimum possible functional size. And I think the worries are now, I think, for the next 6 months to a year, is that a lot of the employment has been supported by kind of wage and salary supports. And even in China, there was rent freezes for galleries that were in kind of government-owned properties in return for not laying off staff in the period. So there is worries, I think, in the next year, once those measures subside, what will happen. And I think galleries will close, and we will see the sector shrink. And this is the worry, because it has such impact on a lot of other areas, on artists and on all the related businesses in the art market. Just looking at the slides again, just one thing that has been a kind of a lifeline for galleries is obviously the online sector. And this, you can see here, this is the way they've been able to keep trading. It's gone from just 10% of the value of their sales in 2019 to 37% in 2020. So it's a huge increase in online selling for galleries. And obviously some of the smaller galleries were probably doing quite a bit of that already, but it's the big galleries, that's the larger turnover galleries, that have seen the biggest increase. And obviously the flip side to that is that they're doing less fair sales. And I think you can see the pivot in Asia is even more kind of stark. This is based on a turnover weighted average of sales. It went from 11% online sales in 2019 to 52% of sales for galleries in 2020. So a huge increase. And obviously this was the impact of fair sales. Fair sales went from 49% to just 8% for galleries. And this again, I think, is the fact that Asia is slightly ahead of the curve in terms of it didn't have those, a lot of galleries didn't have those first few months of the year to rely on for sales. Another interesting thing is just who's buying online, because this online channel is often kind of touted as being the way that you can reach new diverse, kind of geographically diverse clients. And in fact, what we found both anecdotally and in the survey was that a lot of the sales that galleries were making were to their regular clients. So only 26% of online sales that galleries were making were to brand new clients that they'd never had before, which is low in terms of online selling usually, but in some ways as well, given the period that's in it, it's an impressive enough figure that 26% were going to people that weren't familiar with the gallery before. Looking at Asian galleries, that was a little bit lower, 13%, but they did have a very high conversion rate in Asia. So the amount of the share of new to online buyers, the regular buyers that used to buy offline but started buying online, was 39% in Asia versus 29% globally. So not a great amount of selling to brand new people, but they did convert a lot of people to online selling for the first time. And I have one last chart just to leave it on a more positive note. One thing we did find, and these were the surveys that you mentioned that we did with UBS across the US, UK, and Hong Kong. One very positive finding about those three markets was that 92% of the people we surveyed, these high net worth collectors that we surveyed, had bought something in the first 6 months of the year. So there was people actively engaging in the market. 56% of those collectors had spent over 100,000, and that was 70% for millennials. So that they're a very active and engaged segment, even given all the restrictions we were subject to. And we've seen that millennials are also, we've seen that in the previous surveys we've done, particularly in Asia, because they're usually generally between 40 to 50% of the samples we screen into these surveys. So they're a highly active and engaged segment. And this hasn't lowered their interest in collecting at all. And you can see they had the highest in the 1 million plus spending bracket as well, 17% overall. So there's some optimism there that people were still actively taking part in the market despite it being a very difficult year.
Thanks, Claire. So Marc, Claire has just indicated that online has been this huge lifeline to galleries during COVID. Could you speak about some of the specific digital or online strategies that galleries in Asia have adopted? And how have Asian galleries kept in touch with their existing clients, especially during the lockdowns in the first half of the year?
Good morning, everybody. Thank you, Elaine, for the question. And also to Claire for it's always great to have someone come in with a lot of data so you can have a sense for what we're talking about, because I'm going to talk in more generalities. I think it's been interesting to watch, and I want to frame what I think are a lot of positive developments, what I think are a lot of interesting developments, and what's been reflective of a lot of creative, like basically a creativity, in a moment of great necessity and urgency on the digital front, by saying, first of all, it is a tremendously difficult moment for galleries. I mean, as Claire said before, a lot of the galleries are doing okay because they've already taken radical measures like cutting back their staffs extensively. I mean, I think what I see in talking to galleries is, on the one hand, there are galleries who are doing okay. They've managed, their costs are reduced, they're not doing fairs, they've reduced their staffs, they're not funding biennials, they're not funding museum shows. On the other hand, they've cut half their staff, so their staffs are not okay. And also what's really happened is that the artists are not okay. If you cut your costs in half and your revenues drop by half, then you're still balanced out. But that means there's half as much money going to the artist. And so before I go into what's good, I also want to make sure that people don't misunderstand what I'm saying, to say that this is a very difficult moment for artists and for gallerists and for the staffs of gallerists and for art handlers and for all of the broader economy around galleries. This being said, as is the case across all of society, I think that this has been a moment, the pandemic time has been a moment where people have been tremendously creative, and a lot of things that would have happened anyway have been accelerated by a factor of 5 to 10%. Things that would have taken 5 years have taken 1 year. People have pivoted tremendously. And I think Asian galleries, like galleries all over the world, have reacted in a lot of different ways. Some have leaned really hard on online platforms. They've been very active on platforms like our online viewing rooms. They've been very active in platforms, in other third-party platforms. A lot of them have been tremendously creative in terms of learning how to do virtually what they did so well physically, doing interviews with their artists, doing walkthroughs of their galleries, putting great content online, learning how basically to become video producers, learning how to become content producers. We see this, I did a Zoom panel about 4 months ago, and one of the participants was Zuercher, the Indonesian collector, and he was saying, as someone who was used to collecting virtually because of the fact that he's in Jakarta and the rest of the galleries he collects from are all over the world, he was saying it's never been a better time because suddenly the galleries are taking the virtual very, very seriously, and the studio tours are now virtual, so he can attend in a way that he couldn't attend before because he wasn't in New York and he wasn't in LA. And I think what I like to think is that we have a kind of hybrid effect and a pipeline effect, and I'll say what I mean by both of those things. There will be a world after the pandemic, and there will be a world where we do the kind of traveling and socializing and in-person interactions that are essential to the art world, which I think are essential not just to the selling of art, which is happening now, but more importantly, to the grooming of collectors, to the development of collectors, to the discovery of new artists and galleries. And I think what Arif talked about, and this was confirmed by a lot of advisors I've talked to, a lot of collectors I've talked to, is that this is a moment where, to Claire's point before, people are buying from the galleries they know, and predominantly they're buying the artists that they already know. But they have the time and the capacity now and the ability, because of all the digital tools that have been developed, to do a lot of research. And the research that they're doing is giving them a long hit list of galleries and artists that they want to discover, that they want to explore, that they want to meet, or whose work they want to see once things return to normal or the new normal or whatever comes next. And so I think in that sense, I think without being too Panglossian, I think one can hope that the sales that aren't happening now will happen later, or to some extent will happen later, and that there is an enormous amount of research being done by active and engaged collectors. I think what's been interesting also is to see the degree of collaboration. We saw it in LA. There's a project called Gallery Platform LA. There's also a project called Art in Touch, which bridges India and the United Arab Emirates galleries. We see galleries, Silver Lens, for example, in Manila has been tremendously, it's basically turned into sort of an art content production house. I just watched a great walkthrough yesterday in support of the OVR that we're doing right now, OVR 20C. In the same way, Kemmel Prescott Road, which has an enormous legacy, has been really leaning into that legacy, leaning into the collectors, the artists that it's dealt with over the years. And so in that sense, I think we're seeing galleries develop skills, which will be essential in the future, because I think in the future, I hope that we have, on the one hand, the return of the physical market driven by gallery visits, driven by biennials, driven by fairs, of course. And then on the other hand, because of course people were never able to travel as much as they would have liked, those who are not physically present can be better served than ever before. And in essence, gallerists by necessity are being forced to develop a whole new toolbox of skills for activating their collectors, for engaging with their collectors. And I think that's what we can hope is coming out of this moment. It might be interesting. I prepared a short slideshow, and then I'll run through it quickly, and then I'll hand back to you, Elaine, just to give a sense, because I think our journey is reflective of a lot of people's journey. Just as a history, we were forced to cancel the Hong Kong fair in early February. I was in Hong Kong on the 20th of January, and I left Hong Kong being very optimistic about our show in March, and then the pandemic swept in and transformed everything. Luckily, we had been working for a long time on online viewing rooms concept, and we kind of deepened it and sped it up and expanded it. But I think what's interesting, and now if the team could show the first slide, is the extent to which, when we started, we decided, we were thinking along the fair model. Now, if you can go to the second slide, and this slide is kind of reflective of that thinking. We said, okay, we want it to look like you're at a fair, so there's the actual, the concrete floor and the bench and the wall, and I think what we found is often the case is that trying to virtualize the physical event is often can often be counterproductive. I think it's I think when you're in the digital space, you have to think in the digital way. And so what we're doing now, OVR 20C is the second of two OVRs. OVR means online viewing room, in which we're thinking more in terms of other kinds of events. And the OVR 2020, which was in September, and this one, OVR 20C, are both modeled a little bit more on a pop-up store, an auction, or a streetwear drop. And the idea is, instead of having 250 or 280 galleries showing 10 or 15 works across 10 days, it's much more focused. It's 100 galleries, it's 6 artworks at a time. It has a theme. In the first case, all artworks from this year. In the case of what we have now, all artworks from the 20th century. And it's only 3.5 days. And this has been very effective for us. Maybe if you could go to the next slide and just sort of go through quickly. Here you have the grid. This is 6 out of 100 galleries, so you can quickly get an overview of what's going on. And then if you could go in again, and then you go into the next slide. You go in. That's it. Those are the 6 artworks that De South Gallery is showing by Chen Zhen. Next slide. Then you go in, obviously, and then there's information about the artwork, and then last slide. And then there's the specifics of the work, and you can see, you can zoom in, et cetera, et cetera. And what's been great about this format is that people are thinking differently. Instead of doing a stand with, a sample platter of all of their artists, they're doing very specific projects and really interesting historical projects. And we find that in this very cluttered, oversaturated, environment where there is the risk of people getting fatigued or feeling overwhelmed, this kind of focus is really critical. And in the same way, I think galleries have learned to rethink and repackage their programs, specific artists, specific projects, in ways which really meet the necessities of the pandemic. That's it.
Marc,
Yes.
Can you explain a little bit more how you developed the online viewing rooms, the OVRs? Did you do this in consultation with galleries and collectors? And if, let's say, fingers crossed, things improve and travel resumes, would Art Basel consider a hybrid model of in-person events coupled with online viewing rooms? And, can galleries even cope with doing in-person and OVRs at the same time?
So the OVRs, like every major project that we do, were developed first in consultation with the members of our various selection committees, who are gallerists from all over the world. And then, of course, as we had more ideas, we surveyed even more broadly within our network. And of course, in order for it to work for the galleries, it also has to work for the collectors. So of course, we also went to collectors and said, what do you think? Does it work for you? What would you like in an online viewing room platform? But of course, until that moment where we started launching them, people were only speculating about what they wanted out of the platform, And, one of the things that I think, and here it is a market discussion, so I think it's important. One of the big innovations that we did with the online viewing rooms wasn't technical. It was almost political, which was to say every work has to have either a price or be within a price range. And that was unprecedented. We've never required people to post prices at fairs, for example.
Yeah, I wanted to ask you about how you even managed to convince galleries that they had to provide a price or even a price range to participate in an OVR. That's huge.
So we consulted our gallerists, and we said, "What do you think?" And we said, Artsy has done research that shows that artworks with a price on them are 7 times as likely to be sold. And we said, it's going to be so difficult already to sell art virtually. Let's not also handcuff ourselves by having price upon request, So we basically didn't convince them. We consulted with our galleries, and then we gave people no choice. And we knew that there would be some works, some artists that wouldn't be part of the system because of that, because the artists object to the notion of having their prices or even a price range be present within the OVR. But we felt that it was important, in order to have a viable marketplace, that prices and price ranges be in there. And that's been invaluable. It's been one of the big feedbacks that we've gotten from collectors, is like, okay, now I know. Because the irony is that often people assume artists are much more expensive than they are. It's not just that you're priced out. Sometimes you think you're priced out. So I think having an idea of where it falls, and even, for this OVR 20C, we made the price ranges even more specific, because, let's be honest, for most people, like 500,000 to $1 million is just, that doesn't tell you much, or like 1 million plus in an environment where you might have a $6 or $7 million artwork isn't as helpful, because, for most of us, that's that's real money. But even for the super wealthy, there's a difference between 1 million and 5 million. I hope UBS has some clients for whom that kind of numbers don't matter, but I think in most people's lives, these are significant figures. And I have to say, it hasn't been a huge obstacle. And every once in a while, someone says, oh, the artists, and we said, hey, this is it. It's a rule. It's not negotiable. There's no matter how much we love you as a gallery, no matter how much we love the artist, this is essential, and we just felt like, to some extent, you could say it was selfish. We knew that if we didn't do this, people would be less successful and we would be blamed. And so basically we just said, for your own good, we're forcing you to put something about the pricing in there.
All right, shifting gears a little bit. Adrian, I wanted to ask you how wealth behavior has changed or evolved since here in Asia, since the pandemic, and comparing that to, let's say, other major markets in the US or the UK, and to what degree does the behavior mimic Clare's findings?
Thanks. Interesting question. I think there was not too many difference from Asia and the UK and the US maybe, but of course Asia was much earlier in the whole crisis, and so we were first in. Hopefully we're first out. At least if you look at China, we definitely can see things have improved. But it was quite interesting to see. We went to sort of from a supply shock, basically, where you cut down all the factories and you can't produce anything anymore, and so you also can't buy it anymore, to later on to a supply shock when you do lockdowns and you're basically forcing people not to spend anymore because they can't go out. What we have seen, of course, globally, but also here in Asia particular, is that particular people have saved a lot of money. So we saw that the sort of the saving ratio went up from whatever usually it's probably around 10%. In the US, it's much lower actually, to 25%. So people have a lot of pent-up demand. And the interesting part, if you look, for example, at China, which opened up very, very early and sort of was able to avoid a second wave and to avoid bigger shutdowns over the summer months, we actually do see that you can activate this pent-up demand. Once the confidence is coming back into the economy, we can look, for example, even at car sales in China have gone up tremendously over the last few months, and is actually already growing compared to last year, where we had a very normal year. And what we also see, and I think it's quite interesting after sort of the first shock here in Asia, we see, for example, that a lot of people try to move their business digital. So we have seen, for example, in Singapore, a record registration of new businesses. And I think that's interesting and important from two aspects, because first of all, you only open up a new business if you're sort of confident that things are actually improving over the next few months. Otherwise, you will not open up a business. And then it's, of course, an opportunity to do much more digital. We have heard from Clare, of course, spending has moved also in the art market much more on the digital side. And I think it's a general trend that we see globally. So what we would call the work at home companies that are benefiting from these trends versus, of course, sectors which are very challenged, which is one part, the art market, tourism, hotels. Now, here in Asia, I think it's quite interesting. In Hong Kong or so, things are slowly improving. We were sort of getting the third wave under control. People start to go out again. We see actually that spending patterns are going up over the last couple of months. People become more confident. And particularly also for the art market, I was a couple of weeks back around the M+, the new museum that should open up in 2022, but there's already around there, the new buildings opening up, and the M+ pavilion, where young artists were able actually to show their collections already, and people are going there and start to get out. And I think that's very important. So for us, this year, as you have heard and mentioned, also very, very challenging year in terms of growth. But we do think that some of this pent-up demand can be reactivated because saving ratios globally are extremely high. And once we get the vaccine, and we probably think we are not too far away from pre-announcement, and you're going into 2021, that things can rapidly improve, and people already have adjusted and sort of remain between digital spending, but then also start to do the fiscal spending again.
That's hopeful. Thank you. Claire, your findings with the high net worth collectors, 59% mentioned that they felt that the pandemic actually increased their interest in collecting. I mean, this really surprised me when I read your mid-year survey, and I think this really defies many people's expectations. So I wonder if you can tell us why their interest grew during this period. For instance, was it just due to having more free time on their hands, along with this, amazing thing which Marc and Art Basel implemented, which is price transparency, or was there something else?
I think that's partially those practical reasons, but I also think this is a different type of crisis. It's not like other recessions and financial crises. This has been a kind of a social health crisis where, the importance of the arts, I think, across the board, not just the visual arts, but all of the different art forms has been, rethought a little bit, and people understand when they're in lockdowns and all those things, how important it is to have those things in their lives. So I think it's more than, it is partially practical, and it's also partially because it's a different type of crisis, and it's been one where, it's global and it's based on a lot of different factors. And I think it's really interesting in that you mentioned that 59% of collectors said it had increased. That was actually 70% for millennials. So millennials are even more optimistic about this crisis. And I think a lot of that is the fact that, in the surveys as well, they were by far the most willing to get back in the event circuit. They want to travel and do things, in the next 12 months at much higher rates than some of the older collectors. There are also only 1% of millennial collectors that we surveyed weren't actively working with galleries during the first 6 months of the year. So they've been really kind of active in the market during that period. And I think they feel like they will be a little bit more in control of the recovery. So that gives you more optimism when you feel you have a bit more control of the situation. And I also think as well that there is a tendency, perhaps in the older generations, to think that the move online is in some ways a negative development. It's not maybe as good as it was in the old days when we did a lot of things, whereas millennials and Gen Z, younger collectors generally, this is the way that they function, this is the way they interact in all aspects of their life. So it's not that they don't want the events, the live events, but this isn't seen as a negative thing. It's seen as a normal thing and a positive thing that more things are going online, that people are communicating more, that the technology is getting better. It's a normal part of their lives. So they're more interested than ever in engaging with the new technologies. And I think that is what's making those younger collectors very optimistic and very active. And even if they're not the biggest spending segments of some markets, they're the most important for the future. So this is a huge bit of optimism, I think, going forward, that they have this kind of outlook at that level of collecting.
Yes, Adrian, her survey, Claire's survey, showed that millennials and to a certain degree Gen Xers, are the most active buyers for luxury and online. And I wonder if you're seeing the same trends across Asia, and if you think millennials are going to be the magic bullet for the luxury market and the economy in general. And what is your general forecast for the luxury industry for the rest of 2020 and the year ahead, 2021?
Well, I think 2020 is still very challenged, of course, but as we have heard, so millennials have spent more. I think 99% of the millennial collectors bought art this year already. The Gen X as well, 94%. And some are actually spending quite a lot and substantial amounts. What we also see, of course, they sort of tend to buy more what they know, from galleries that they know, from artists that they know. But the good news is, for example, here in Hong Kong, people have been a bit more adventurous and started to look into new artists or new galleries as well. I think what we see is particular the segment of the millennials will be extremely important, not just probably for this year, next year, but for the next decade as well. We see one of the biggest wealth transfer that's happening at the moment, that just started, and there's probably around 2.1 trillion US dollar that will be shifted over the next 10, 20 years from sort of first generation, second generation to the new generation. And I think exactly these segments, they have been much more involved into art. They're much more sort of prone to actually be active in this industry. And what we see that they are much more also open to buy digital. They already were actually buying, a lot of them were buying digital already last year, so before the pandemics. But as Claire also mentioned, it's something very natural in their life to do business online and to be active there. So this is an extremely important segment, and I think it will grow and it will become more important. And here in Asia, we still have, in China, every third day there's a new billionaire created. We just released our new billionaire report. So the amount of wealth creation here in Asia is unprecedented. And this will create new segments and new basically collectors over the next few years. And so you definitely see the shift towards Asia over the next couple of years in this segment.
Mm. So Marc, given that millennials, I'm like a little bit obsessed with millennials like everybody else, but given that millennials are doing most of their online spending at auction, I wonder how can the fair and galleries recapture the market share and compete with the big auction houses online?
I mean, I think I think there are two things. One is there are obviously the people who are starting to buy, and I think we have to make sure that we catch them early on in their collecting arc. And for example, when we have the tool of fairs for that, we have programs like the VIP weekend program, which specifically geared towards people who are new to collecting, people who are new to the specific fair, and really trying to make them part of a group of people to create a kind of cohort, within the fair ecosystem, within the gallery ecosystem. And I think a lot of it is about messaging. I think people need to understand that, if you're interested in contemporary art, if you're interested in supporting contemporary art, that it's a very different thing to buy at auction than to buy from a gallery. If you buy at auction, you benefit the auction house and the collector who consigned the work. If you buy at a fair or in a gallery, you benefit the gallery that supported the artist from the beginning, and you also benefit the artists themselves. And that's a kind of ethical, moral thing, I suppose, but also just, I think it's much more interesting to buy from a gallery in the sense that the gallerist can give you access to the artist in a way that an auction house can't. From an auction house, you can get work. From a gallery, you can get knowledge, about the artist. You can get access to the artists themselves. You can get access to their studio. But I think in general as well, as you were saying before, as Claire was saying before, the millennials live their lives digitally. And so I think the better the tools are that we've developed, the better tools are that our galleries develop, the more likely we are to serve them in the way that they expect to be served when it comes not just to their collecting, but to the rest of their lives. But I think it's also, this is a collection, a generation which is just starting to collect. I think we have to see how they develop in their arc. And I think it's kind of natural that they've started with auction houses. I mean, the other thing too is I think it's whereas galleries traditionally have sort of leaned a lot on the notion of exclusivity and the notion of opacity, I think if you're going to sell to millennials, you have to be transparent about pricing. You have to be transparent about the markets of the artists. I think you can't build up this notion of like the velvet rope and the sanctum sanctorum. I think you really have to.
But is that the appeal of auction houses, because it appears transparent?
Yeah, I mean, we're not going to get into chandelier bidding and that kind of stuff. But I mean, the point is that at an auction house, he who bids the highest gets the work. Whereas at a gallery, there are questions like which other artists are you buying, and which boards of which museums do you sit on? And there's the notion of placing an artist, for two reasons. One is because you build an artist's reputation by selling them to the right collections, the right institutions. And the other is that you avoid, in the case of your hot artists, that you're simply selling to speculators or investors, And I think that's not a thing that the gallery world has traditionally done a great job of explaining. And I think, quite frankly, a lot of millennial collectors come in, with the experience of the rest of the world being about like giant open markets, and transparent markets. And the art world can feel a little bit snotty or precious, depending on how, you come into the gallery and maybe the woman or the man at the front desk barely says hi, and then you try to buy an artwork and they say, well, who are you and what do you own? And I think there has to be a kind of psychographic shift, or let's say there has to be a paradigmatic shift in response to the psychographic shift, which comes with the general wealth shift that we're seeing now.
So I want to move away from millennials to something that I found really interesting in the report, where both Clare and UBS raised this point that the world will be less global, and where there's this trend to move away from an interconnected economy to one that's more local and supporting its own. And I want to know, what does this mean for businesses like Art Basel and cities like Hong Kong?
Who gets that question?
All of you.
I mean, I'll jump in on it. I think the localism, the local impact, the local thinking is a temporary effect. And I think especially the kind of people that drive the market, be it artists or collectors, are precisely the kind of people that will come roaring back into international activity as soon as they can. I mean, we saw it on our Instagram feeds, as soon as the borders were down, the super wealthy were everywhere from Ibiza to Mykonos to the Maldive Islands, so it's like, I think people who've learned to live internationally, people who, let's say, come from a certain background and then went in Asia and then went to school in England and then went to high school in England and then went to college in the States and then came back and they're running a business which is international, they're not going to suddenly become focused entirely on Hong Kong. I think people are more conscious of the importance of being tied into your local environment, but I don't think everyone is going to start, only wearing clothes from their country and only eating food, only eating the cuisines of their country and only buying the artists of their country. I think it's this momentary kind of nesting effect. But to me, I think people may be a little bit more mindful about how they travel and all that kind of thing. But I just don't think people are going to suddenly become sort of, you could call it, localist, or you could call it xenophobic, or you could call it nationalist, you could call it closed in. I just don't. I mean, I think it's kind of like everybody making sourdough or whatever. Like, I think it's just a thing that happens as a result of the pandemic, but it's certainly not an accelerated trend. It's certainly not something that was happening before. And I'd love to see the evidence to think that 5 years from now, that people are suddenly going to be very local in their thinking.
Claire or Adrian?
Well, I agree with Marc in part, although there's been a lot of factors building against kind of free trade from various kind of protectionist stances of governments, those kind of things, which, I mean, to me, as a complete free trader, really, I'm very, obviously they're bad for a lot of things based on comparative advantage and whatever. But the art market is, it goes against its nature to be completely local, as Marc said. And I think it has been a time of reflection, though, and I think there was huge, before the pandemic came along, one of the biggest concerns in the art market was sustainability and, the carbon footprint that the art market has. And I think that there has been a time during this time to reflect on, does there need to be quite so many things going on in different places that everybody needs to go to? So I think there will be, regional collaborations between galleries have worked, really well in the past and will continue to build. And I think that's something that was happening anyway, kind of smaller local events. Alongside, major international events. So I think it is something that's building, and I think there will be more local collaborations. But as Marc said, again, alongside, the international kind of communication and cross-cultural communication that is pivotal to what goes on in the art market, both from a business point of view and also from a cultural sharing point of view as well. I think the two need to coincide together.
I would agree, of particular on the art market, the art scene, very open people. There are people that are they have multiple homes. Our clients have multiple homes. We are a global company. We are a big art collector as well, UBS. But the way we look at the world, probably we see political shifts, if it's in the US, in Europe, here in Asia, which probably will mean there's more regulations coming through. And we see this trade war between China and the US, and it has sort of extended. It's probably less within the art scene and the people itself. I don't think they have changed at all. They probably become, as Marc also mentioned, become even more global because they study abroad. A lot of Chinese students in the US, in the UK. But it's probably more from a regulatory environment that we may see some speed bumps, tax regimes. How do you basically bring art from one country to the other? And that could sort of impact, of course, the market as well.
So I thought we would open it up to some questions from the audience. There is one here. Maybe this could be for all of you, but maybe Marc would want to answer it first, which is, what is the one piece of advice you have for collectors next year?
Wow.
I think all of you could answer this.
I mean, I guess my question is, what is next year, you know? Because if we don't know that, it's hard to give that advice. I would say, think hard about how you collect. Think hard about where you're spending your money. Think hard about which artists and galleries you're supporting, because there is good collectors think about their role within the art world and don't just treat it as a place from which they can buy things to put on their walls. You know, I think a good collector thinks of themselves as someone who has the privilege and the good fortune of being able to support artists, and think about which types of galleries and which types of artists they want to support, you know. And I think especially in this moment where that support is existentially relevant for galleries, I think supporting the galleries and the artists who have the greatest impact in today's society in this perilous moment is the job of a great collector. I hope that doesn't sound too preachy, but if I'm going to give advice, it might as well be advice I believe in.
Adrian, Clare, one piece of advice to collectors in the coming year?
I don't have any great advice, but I think the main thing that galleries are looking for is people to kind of re-engage with galleries. I think this has been a time where I've been talking in various kind of research for the last 10 years about the decline of the retail gallery, and how people are kind of, the foot traffic's really low and people are just doing fairs and whatever. I think this is a time where collectors they're going into galleries by appointment when it's not crowded, and they're really slowing down their viewing there, and it's just to re-engage with galleries again. A lot of that at the moment, well, they're restricted as galleries around them, but I think that's been a really positive thing, and just to keep doing that to kind of to support galleries as well as events, and to kind of re-engage with that kind of slow viewing, as well as all the excitement of the events around the market. So it's just to try and take some time, and also to, from our global versus local thing, is just to keep an eye, not to only think locally, the importance of trying to look at a wide range of offerings from galleries around the world. Not to get into that protectionist mindset and only start concentrate on what's around you, but to keep the global vision, which we now can do through through technology and through that channel improving all the time. You can access things from such a wide range of places without even leaving your home. So just to keep engaging.
Yes, Adrian, from a banker's point of view.
Yeah, sure. We take a bit of a more positive view going to next year. We think a vaccine will be very widely available latest in the second quarter next year. Things should really normalize in the second half of next year. There will be an economic impact, but overall, as I mentioned, there's a lot of pent-up demand that should come through, and so we would expect a strong recovery globally, and in particular in the art market. But until we get there, it's probably also very worth to move a bit more digital. We see, and Marc also mentioned, price transparency, which has improved. And it's actually something which Clare also in the report, the UBS Art Market report came out, that actually a lot of collectors prefer this transparency. And it gives them sort of a better view on how they probably can extend their collection and what they're paying for, and compare. And so make use of this digital innovation and be online and try also support new artists, because we see that so far a lot of collectors have bought more from galleries they know or from artists they know, but with the improved online availability, that you also explore into new artists and new galleries.
So there's a question for you, Clare, on Facebook, which says, ahead of the next edition on the Art Market Report in March, what are you looking to cover? Will you include any statistics on private buyers versus corporate and versus public?
Sure. Well, this is a worry for me this year, particularly in the auction sector, is that a lot more of their sales are going to be engaged with privately, and they do share those with me at the end of the year, but the transaction by transaction data is starting to shrink away. And even with the growth in transparency in online viewing rooms is one, it's kind of exciting because for collectors, but from a point of view of analyzing the market, we still don't know what price points those transactions take place at. It gives us indicators, but we still don't know the final volume. So I still have to put the work in on surveys and things like that. But we're actually, the survey that we did in July is a two-part survey. We're working with Duke University. So we'll be following up exactly with the same galleries that answered to see some of their strategies, how they panned out and how successful they were by the end of the year. So, and the ones that were more optimistic, were they right to be optimistic? Did optimism actually feed into better results? So it's very much a linked up gallery survey this year. And then just trying to put the pieces together. I mean, it seems like it should be an easy year. There'll be less data, but actually the volume of sales at auction is huge this year. It's really, the values are down. The first 9 months of the year, just based on, say, Sotheby's and Christie's, values are down nearly 40%, but the volume is only down about 20% or even a little bit less. So there's a huge amount of activity still going on, just at a slightly lower level. So it's going to be a very tricky year to put things together, but it should be some very interesting findings. And I mean, this is the fear I always have, is that while things go online, it looks more transparent, but you know, there's a lot more of the actual final kind of transaction prices are more opaque than ever from a market analysis standpoint. So I just do hope that the auction houses in particular keep on publishing their online sales, because not all of them are doing that. And it's very important, not just for kind of odd people like me, but for appraisers and for all the people that work in valuation and that kind of thing. It's critical that they have that transaction data. So I do hope that the transparency is not just on the face of it. It is quite deep in the market, because it's a huge thing. As Adrian said in the surveys, I think it was 81% of the collectors we surveyed wanted transparent prices, and I think 96% were in favor of it. So very few people against price transparency in the market. It's a really important thing going forward.
So price transparency is here to stay, thanks to COVID-19. Yeah.
Well, I mean, kind of, in a sense, I mean, and Clare can speak to this better than I can, but I mean, I think from a research perspective, whether that's private research or academic research, the fact that, one of our auction houses that one of the major auctions, that Sotheby's has gone private again, will mean that there's maybe not the same, pressure to reveal what's going on in the broader business. And of course, the fact that there's so many more private sales at the moment means that there's much less public data. I mean, I think one question I would pose to Clare and maybe also to Adrian is, like, do we think the current trend towards private sales is an effect of the pandemic and therefore will go away? I mean, at auction houses will go away, when things are rolling again? Or do we think that's a long-term secular trend that will hold? Because if you think about price transparency, that's essential.
I mean, I think private sales have always been there in the auction sector, but it's something, I think the auction houses are very multifaceted businesses now. They're not thinking of themselves as the public auction sector that they used to be, 20, 30, 40 years ago. So I think that's something that is going to continue, and they're spread of what they sell as well. They're selling across multiple channels and across multiple sectors, including luxury and different things. So that the idea of the art auction house that just sells publicly to retail gallery clients, which it used to be, that's no longer a case. So I do think the move to private sales is one that is going to keep on expanding. But I mean, the importance of the live events can't be understated either. These are huge theatre, if you like, for the auction sector. So they won't go away either. They'll become even probably more special and more high end. But I think the auction houses were somehow ahead of the gallery sector in the move online, because it's always been the kind of a vision of the future of the auction sector that would operate on these two levels, the high end being these kind of very live theatrical events, and then a lot of the lower value sales moving online and being done privately. So I think that there's a different future ahead for the auction sector, and even the calendar that it looks at. Where this year is so odd that we're not looking for this big lump at the end of the year where there's all these sales. There's a lot of different events, a lot more sales. We're moving more to kind of continuous trading nearly all year round, which is good and bad. I think there's some advantages to the way it was, but we're always looking for it. This has given us a chance to see what might be better as well. So hopefully that will improve.
So Marc, there's a question for you about ticket revenue. And if, knowing that an important source of income for Art Basel is our ticket sales, right? And if the pandemic continues, will you begin to charge online visitors access to your online viewing rooms?
I don't think that, okay, so two things. One is actually ticket revenues in our particular equation are a relatively small percentage of our income. It's depending on the fair, maybe 10 to 15%. We're really not dependent upon ticket revenues in the same way that a concert hall would be.
But in Hong Kong, you sell enormous number.
We also sell an enormous amount. The core of our revenue is galleries for square meters and the services related to them, and partners, our corporate partners. From that perspective, the ticket revenues have never been a huge part of our financial equation in the physical space, which is why we've done things like, originally you had one VIP day and then we expanded that to 2 or 1.5. And so, that costs us money, obviously, but it's not as important as delivering an environment which is right for our galleries and our VIPs. To come back to your original question, I can imagine charging people for something online, but I don't think it would be for access to the virtual viewing rooms, because the whole point of doing a viewing room is to make work accessible to the largest possible market. And we're not arrogant enough to think that we have the email address and contact information of every single possible potential buyer in the world. And there's a reason why, for example, OVR 20C, which is running now, has, a 2-day VIP, but then a 1.5 days, which is just open to anybody in the world that just signs up with an email address, because we strongly feel that there are people who are not in our system, who are not in our network, and who, to your point, points before, they may be the millennial buyer who's just coming into the market, and why would we make it even harder for them to access our galleries? Why
there's something attractive to exclusivity.
Yeah, there is, but I don't think charging people is, I think the exclusivity is getting the VIP card. I don't think, making it cost $10 to access the VIP rooms is going to have a huge impact on our economics, but it does make it's one more obstacle. It's one more kind of barrier to entry. Sure, there are lots of people charging lots of different types of audiences for things online, but I don't think the viewing rooms are the type of compelling content that are going to deliver, you're going to have that. It's not like a Fortnite concert, by Travis Scott or something.
So one last question to all of you is that Clare's report mentioned a lot of pessimism among galleries and collectors here in Asia. So I want to know if any of you see any bright spots in the near future for all of us here operating in Hong Kong or Indonesia, the Philippines, China? For instance, when do you think galleries can expect a return to growth?
I mean, I think Adrian could probably answer that because he's probably got the best answer.
Well, look, economically, it's still a difficult time. And now we also see Europe going back into sort of a semi-lockdown. In the US, cases are spiking. Here in Asia, we're slowly opening up. Hong Kong gets a travel bubble with Singapore, which should open up in a couple of weeks. So there will be at one point we're returning back to sort of normal, but the next few months will be definitely still challenging in terms of economic growth outlook, and in particular for any industry that is sort of relying also on traveling. Which of course the art market is very important, and to meet and to socialize. And I think that's one of the key challenges that still is with us. I mentioned before, we do expect that sort of vaccine news are slowly coming out, and that should help. And then sort of getting this macroeconomic growth going into next year. Maybe also when the survey was done, it's a couple of weeks back, things have moved on, and we can see that the sort of also in the spending pattern, and if you look at retail sales here in Asia, which actually has started to rebound quite strongly, that sort of more confidence coming back. We also have learned much more about the virus than a couple of months back. We know it's maybe not as, or at least mortality rate is not as high as originally expected. And also this is slowly this sort of piece of confidence that is coming back into the consumer. But when do we get back to normal? That's probably still 9-12 months from here, and until then you have to look for different revenue sources. You have to look for different ways to get in contact with potential buyers, bringing the collectors together, and that's something everybody's facing, and probably stay with us for the next couple of months.
Well, thank you to all the audience members who asked questions, and thank you to Adrian for making time out of your busy schedule here in Hong Kong. And I want to especially thank Clare and Marc for waking up so early in the morning to participate in this fascinating and completely relevant conversation. And for those of you who have not yet read Clare's mid-year survey, I highly encourage all of you to download it and read it. And of course, you know, we're all staying tuned for the second half of your survey. So thank you again, and goodbye.